With all the positive sentiment we've seen in the markets these past few weeks, silver has been lagging behind. So let's take a look in today's video at the technicals to see where we might see the next key areas to watch out for. Hello and welcome back to our channel. My name is Daniela Hathorn from Capital.com. In today's video, we are going to be looking at silver. It's going to be mostly a technical video because there isn't that much to update on the fundamentals. But before we get into it, please like this video, comment, subscribe, and turn on your notifications. So with silver, as I said, most of the last 2 weeks has been positive sentiment in the market. We've really seen that risk appetite increase. Most of this has been on the back of that reopening in China. As we know, last weekend, we saw that international travel ban lifted, despite a lot of restrictions still in many countries for incoming passengers from China. Nonetheless, we do have that reopening of movement between people, and that has been pricing in that very good sentiment in the market, especially on what that means for growth in the next year or so. A lot of those growth aspects in Europe and the US revised higher, partly on the back of this reopening in China. So that sentiment has been boosting the market. It's been helping silver somewhat as well. But the outstanding performance we have seen in the commodity space has been gold. Gold has been rallying significantly over the last 2 weeks. And whilst today's video is going to be focusing on silver, it is important to note, because of their close correlation, that a lot of the boost in gold has also come from that boost in gold reserves from China. This is in their attempt to reduce their dependence on the US dollar. So that has been helping boost the performance of gold. But also what we've had in the general sentiment is the data coming from the US that's been falling in line nicely with that change in momentum from the Federal Reserve. We are expecting now that February meeting to see only 25 basis points hiking this time. That would be the second consecutive reduced hike if it does happen. Remember, we went from 75 to 50 in December, and now we would potentially go to 25 in February. So that has been helped, of course, this market sentiment as well. And on the back of that, that US CPI data we saw on Thursday coming in pretty much in line with expectations, headline and core inflation dropping significantly on that year-on-year reading. The month-on-month reading for headline actually below expectations, which is good, dropping 0.1% to minus 0.1 in December. But that one sticking point for traders and for those dovish hopefuls was the core month-on-month reading coming in higher than the previous month, in line with expectations, but nonetheless coming in at 0.3%, which is higher than the reading we saw in November. That is the one sticking point, because some of these key aspects for consumers like shelter remain elevated. And despite the drop in energy prices bringing down the overall CPI number, we do still have those sticking points like transportation and shelter that is still very much at the core of these elevated prices for consumers. And that could be one of the points or the areas where the Fed touch upon to continue with their hawkish policy direction and continue seeing elevated rate hikes. So that is the one area where we've seen that risk on sentiment slightly subdued over the last few days. But nonetheless, for gold and specifically silver, we have seen that rally unfolding on Thursday and Friday. So let's go straight into the chart to see what we could expect from silver over the next few days. Okay, so we are on the trading view, trading platform. You can see this is gold. Let's quickly take a look at gold. As I said, not what we're going to be focusing on in this video, but definitely important for its correlation. That strong rally coming there from the beginning of the year, mostly on the back of that reopening in China, but also the data in the US. You can see Thursday and Friday's candlesticks here really pushing higher. So we do have that positive sentiment coming in, and now around those highs that we saw back here in April last year. If we're looking at silver specifically, as you can see, not quite the same. We have seen that positive rally sentiment really coming in from the lows here in October. Remember, that is when we started to see that data in the US signaling that turn in momentum, weakening a little bit. And that, of course, changed those market expectations about the Fed's rate hikes, and started to see that rate curve, that market implied rate curve coming down slightly. We do still have a little bit of disparity between what the Fed is pricing in for the next year and what markets are pricing in. So at some point, we're going to have to see that give. And of course, that's where we're going to see a lot of that momentum coming in, especially into equity markets, but also into gold and silver as well. That bouncing effect in the commodity market in terms of the US dollar. But nonetheless, we do have that positive sentiment and we have been pointing higher. But as you can see, compared to gold, we have been seeing that flattening out of momentum, a lot of sideways consolidation. As you can see, a few attempts to bounce higher, but still a lot of resistance. And I think one of the key areas to watch out for is this resistance that we saw back here on Tuesday, the 13th of December. Remember, this was when we saw that November CPI come out. So that positive sentiment consolidating, but then hitting an area of resistance just around 24.20, as you can see. That sending price lower in the immediate future. And then we saw that rally once again building as we saw that improved data coming out. But nonetheless, that resistance really acting, as you can see. We didn't manage to get a close above this level until last Friday. So even though we had a few attempts to break higher, as you can see, that candlestick really coming down, ending the day actually lower and not managing to close within that region. So this is the key area of resistance right now, between 24.20 and 24.50. If you zoom out a little bit, we can see that back here in 2022, but also 2021, it was a key area of confluence. We've seen a lot of times price come into this area, finding resistance, finding support along the way. So it could just mean that we are back at a key area where we start to see that confluence coming in. And in fact, we've already seen it so far as resistance. So a key area for buyers to watch out for is this top side area here, 24.50, looking for a break above that area, which is where we saw that resistance on the 3rd of January, which is actually the high for the year so far, but also the highest since April last year as well. So it looks like we are attempting to break higher. Friday's candlestick seeing that close within that region, the first time we've managed to do that since we hit it back here at the beginning of December. So far today, that momentum, as you can see, really painting that indecision. We've got that longer wick to the upside, but also a little bit of a tail, as you can see, and the body of it really non-existent for now, pretty much unchanged from the open, signaling that battle between buyers and sellers to really determine where to go next. If we're looking at the RSI, we can see it is holding above the 50 line, but starting to trend to the downside as well. And actually, we are attempting to see that higher high compared to the highs that we saw on the 3rd of January. Not quite attempting it yet, but similar to momentum. So we're not quite there in a divergence with the RSI, because we are trying to break higher both in price and on the RSI. But that resistance really evident now. And looking at the moving averages, we're waiting for a cross of that 100-day moving average above the 200-day. This red line above the yellow line, that would signal that bullish momentum consolidating more in the medium term, but also we'll have the moving averages stacked in bullish form with the 20, 50, 100, and then potentially 200 underneath. So looking for that cross to happen, hopefully in the next week or so, really consolidating that momentum higher. For now, for me, it looks like resistance is prominent. I struggle to see a significant break above this area during this week. We do have a little bit of lack of momentum this week, potentially on Wednesday, we have the US PPI for December, but also retail sales. That may provide a little bit of a boost if it moves in line with expectations that the economy is cooling and therefore we don't need as much intervention from the Federal Reserve. But nonetheless, it may be an area of consolidation heading into that Fed meeting on the 1st of February. So watch out for this area here. I would expect this to continue to provide resistance as we move alongside it. The path of least resistance really not clear at the moment. As I said, it looks like mostly sideways move as we build up those expectations. A little bit of a wait and see scenario to see what happens over the coming weeks heading into that Fed meeting on the 1st of February. That is it for today's analysis on silver. Thank you for watching and don't forget to subscribe to our channel.